morning, Gavin Chamberlain, the CEO of Bannerman Energy. We're developing the Etango project in Namibia at the moment and are looking forward to sharing some of the progress that we made on the project with you.
Good to see you, Gavin. It's been far too long, but you have delivered a little bit more certainty around your numbers into the market recently. Tell us all about it.
Yeah, Matt, thank you. Yes, this has been the combination of 18 months of fairly hard work. So I think in our previous discussions, you've asked us around our capital numbers and the certainty around capital numbers. And we've spent the last 18 months doing some technical work, but also doing some serious work on confirming our capital certainty. So we made the release recently, which is the culmination of all of this work. And I think fundamentally a really good message in that the capital costs have now been confirmed at an increase of 11.3%, which takes into account inflation as well as some technical changes. And also a really, really positive result for everyone, I think, is the all-in sustaining cost has only increased by 2.6%.
That's right.
Basically $1. So we've gone up to $39. Still leaving us, we're not at the bottom end of the production curve, but still very much aligned with where we were previously.
Fantastic. Now, clearly the market has reacted positively to this as well, but also regarding funding, they've got more certainty because these are up-to-date numbers, and they can feel a little bit more confident about your ability to deliver against this. So Talk to me about those sorts of conversations that you're having and you're looking to have, and what you focus in on. It's more than just the ASIC, isn't it?
Yeah, no, definitely. I mean, so almost every single investor conversation that I've had in the last 6 months, the one question that everyone's asked is, well, what about your capital numbers? What are they going to do? And, our answer's always been is we're working on it and we'll let you know. So to finally be able to come out and actually let people know what the result of this work has been is, I think, a very positive, and I think the market's reacted to that. I think also investors are putting in their own sort of assessment of what inflation is going to be, and I think with the results, we're probably below what most investors would have factored into their own calculations. So I think a positive result overall.
Right. Okay. And just sticking with the money if I can, because you guys obviously need to know that you're going to be able to mine economically. You've done that. The funders are going to know that you can repay the kind of whatever debt structure that you put in place. I think you can definitely tick that box off. But I think for the market in terms of the off takers, they want to know that you can actually deliver in a sustained way, and there's going to be no trouble further down the line. And I think you feel you've answered that question.
Yeah, as a sort of a man with lots and lots of project experience, is one of the things that we did on day one when I joined the company was say we really need to focus in on where this capital cost is going to. So these results are not a fluke. They've been planned, and it's a strategy that has now come to fruition. So on day one, when we started the weekly meetings for the feed process, we put in a capital cost tracking system whereby for every decision that was made, we tracked what the capital cost impact was. And we're doing that on a weekly basis. So we've had no big surprises. Then over and above that, I also got the CFO to generate me a simplified financial model that we've given to the project team. So for every single technical change we've made, we've assessed the impact of CapEx versus OpEx in terms of is this a good or bad decision for the project. So we followed a system here. This is not lucky. This is being planned, and it's part of, that my mandate has always been to be ready, and part of being ready is to understand the risks and actually minimize the risks. And I think what we're seeing here is an outcome of risk minimization in terms of the way we approach the feed. It was cost focused from day one. It wasn't a case of technical engineers go off there, do whatever you want to do, which is very often what happens in these scenarios. Everything was brought back to, okay, that's a good idea, but what does it mean to the costs? So every decision we've made in this process has been cost focused. So I think the general outcome of this is probably one of the most positive experiences that I've had, because I was expecting to find lots of little problems. You always know better than everybody else until you get involved with the detail. And I've been very pleasantly surprised at the detail that was in the DFS. So where I thought I was going to find amazing savings, I haven't necessarily found amazing savings, but I've found good information that I can be confident in moving forward. So I think the number we got now really looks good going forward and is really achievable.
Okay, so certainty seems to be a kind of key phrase, and so confidence as well seems to be a kind of key phrase throughout all of this conversation. I want to talk to you about CapEx costs and why I think it's important to talk about where you're at with that is because we've seen a lot of projects that have come in at, plus $1 billion, and they're a little bit harder to get over the line. So where do you guys sit?
Yeah, so the capital's sitting at 353, up 36 million. And the interesting part about that, there's been an obvious upside for us in terms of the fact that the Namibian dollar is linked to the rand, and there's a benefit to the project because the project's funded in US dollars. But once again, not a fluke. It's something that's been planned. So over 40% of the capital cost, we've looked at using specifically Namibian resources to build the project. So once again, as it comes back to the confidence thing, is we broke down our contracts into smaller packages so that we could utilize Namibian contractors and keep the money in Namibia. And by keeping the money in Namibia, we've benefited in the overall capital assessment. But also, we wanted to get better certainty technically as well. So in that increase, 21 million odd is discretionary spend that we identified that will add value in one of two ways. It will either reduce our OPEX going forward, or it will improve our technical certainty around the throughput of the project. So in this whole process, we've dealt with three things. We've got capital certainty, we've improved our OPEX, and that shows in the fact that we've only got a $1 increase, and we've also much improved in terms of the certainty around the throughput of the project. So people can now look at the project. We've got a plus or minus 10% accuracy in terms of the work we've done, which has improved from the plus or minus 15% that we did in the DFS. And that is, in an international standard, highly acceptable in terms of moving a project from study phase into execution phase. So
right.
I'm not sure that addresses your question, but that's really the essence.
It does, and I kind of want to start focusing on the money thing because obviously, look, I think the market's taken a little bit of a pause at the moment. Uranium prices, it's sort of 25% off of the highs we saw at the beginning of the year, which were excessive, I think, and hopefully moving into this more moderate, accretive growth going forward. But you need to understand how you time the market. You've always moved at your own pace. You've got money in the bank, so you've got that optionality. How, now that you've got this feed here, how do you move things forward? Do you want to accelerate things, or is it really a case of just taking your time and seeing what the market suggests?
Yeah, so once again, is the two streams of our strategy. So be prepared and be patient. The be patient hasn't disappeared. So what we don't want to do is be driven by an FID, which is determined by a date that will align in the sand. We still want to maximize our return to shareholders. Our shareholders over the last couple of years have been extremely patient. And we didn't want to jump at the first $65 contract that was out there and secure that just to say we secured an offtake contract. We really want to secure our offtake contracts at the right price. We do believe that we're getting very, very close to that region. And based on the work that we've done now, both on the project and within the offtakes, is we are confident that we will actually reach FID before the end of this year. And we are confident that we'll have uranium in the market by 2027. And this is part of the process that's taken us down there. Now that we've got certainty of costs, we now have investors that understand that there's a lot more confidence in the pricing. We have off-takers where we have a lot more confidence in terms of what we can and should be negotiating. And potentially as well, we also have debt funders that now understand where the cost will go to on the project. So in terms of the funding process, I think we are a lot further down the line than we were when we last spoke, which I think was in March. So in the last 3 months, I think we've made substantial inroads into the questions that were being asked around how we fund this project.
Right. Okay. So timing is still within your control. You're not pressured to move any quicker than you want to. So we've got to talk about the market now. We've obviously, I think, a lot of people waiting to see what Kazatomprom's delayed announcement in August will be, and in terms of do they tend to increase production or not, and indeed where those pounds go, east or west. So with that in mind, you're obviously conscious of what's going on in the market at the moment in terms of what seems to be sort of heading towards a bifurcated pricing environment, potentially, if the West cannot secure the pounds. A lot of people look to African projects like yours and wonder, where those pounds are going to go, because China always be a big player in Africa. They're quick to move. They need to secure those pounds. The West a little bit slower. What does the future hold for us, Gavin?
And I think Namibia is once again one of the big advantages for us, is that traditionally it's been able to sell its uranium anywhere in the world, either east or west. So there's obvious interest from both parties. So we are talking to American utilities, but the Chinese are also obviously interested in the product. So once again, that creates potentially a competitive sort of scenario where we can actually move forward and actually get the project financed in the right manner. So we are entertaining East and West at the moment, and we can do that because of the nature of Namibia's history. And we're very comfortable with where we sit at the moment with the parties that are talking to us.
And by optionality there, you mean East and West, are you referring to the funding or offtake?
It could be a mix, Matt. So as you know, on the strategic funding side, potentially some people may be offering, sort of to buy product up front to secure product in the future, which, is it an offtake or is it strategic funding? It's the question that you may need to answer in your own minds, but effectively is we would entertain an open scope in terms of strategic funding. So depending on what people wanted to offer at what level, but potentially operating at a project level, securing X amount of offtake for X amount of capital input would be the basic sort of explanation of where we start on strategic funding. Off-taking, we're having conversations, but at the end of the day, it's probably going to be a combination of both, and potentially filled up with equity and debt. But to give you that number, it's impossible at the moment until the strategic funding is sorted.
Okay. When you're sort of looking around the market at the moment, there's obviously people talking about this growing supply deficit, where there's perhaps not enough companies able to get into production anytime soon. You've got, the Canadian contingency, you've got a kind of small American contingency, you've got the Africans at play, as contributors, and then there's the eastern side of the equation. What are your expectations around maybe money flowing into the sector can help advance some of these projects forward, or is it always going to be held up with licensing and permitting issues?
Yeah, so this is one of my favorite ones to talk to. Bannerman as a whole is, if we're looking at greenfields projects, it's for investors out there that are wanting to get involved in uranium, to go and get involved with an existing producer is expensive. To get involved with a greenfields project that's far off production is risky. And we believe that Bannerman probably sits in a fairly nice sweet spot at the moment, along with a couple of others, not too many, probably all you count them on one hand. But effectively is the sweet spot being that we are ready to go into construction if we get funding. And we've got enough detail and backup to prove to people that we can do that. And we're also fairly cheap. You're not trying to buy an existing producers or investing in an existing producer. So we're sitting in that sweet spot. But what really makes it attractive for us is, so we are greenfields. We're fully environmentally permitted. We have our mining license in place. We are getting construction ready as we speak. So by the end of July, I'll have access to the site and I'll have water on site. There's no other project on that list that can actually say that they are construction ready. We now know what our costs are going to be, so we've de-risked it to a large extent. So effectively, where we're sitting right now is we're sitting pretty in that we are almost ready. We're ready to go into construction. All we need is the funding, and you can count our competitors on one hand. And then when you take the Namibian jurisdiction into account, potentially 2 or 3 of those competitors fall off the list because either they're not permitted or they're sitting in African jurisdictions that are not nearly as friendly as Namibia. And you start getting down to maybe 1 or 2 different investment opportunities. And we really believe that Etango is probably leading that pack right now.
Right. And for now, we're sticking with this version of it. First things first, right? But at some point, there's the option of maybe whoever comes in looking to maybe say, let's scale this thing up because you can. How much more work would be required from you to be able to kind of show that slightly enlarged project?
Yeah, so, I think that was our last conversation in March. We just released the expansion extension study. So the expansion is really, really, it's a good option for all of us. So all of this work is based on 12 years worth of drilling work and technical work, etc. We already have a reserve that supports doubling up our production from 8 to 16 million tons. So to take it from the scoping study that we released in March to a full-blown DFS between 6 and 8 months to be in a similar position to where we are now, but in that 6 to 8 months, we would already have started construction of the 8 million tons. So we will have even more financial certainty around what the expansion case could look like. So typically, we could get into production on the 8 million tons and almost immediately start production on a follow-up 8 million tons mirror-sized plant. So the timeline around that, once again, is within our control. We haven't pushed a button to do any additional work on it because of the level of technical detail that exists in the background. So we could get that moving very, very quickly. And if we do see a really, really buoyant uranium market moving forward in the next couple of years, potentially all of that product could be sold into a very buoyant market, which is very different to what the original financial evaluation was done on.
Well, you guys have had a good 2023. 2024 has continued along the same trend. It seems. Is there much more upside to be had from you guys, you think?
Yeah, so we have definitely. So in terms of being ready, we have already placed the contract for the detailed design, focused in on the earthworks. So once again, what we're doing is we're moving forward in small bite-sized chunks to make sure that we don't eat away at the schedule that allows us to put uranium into the market in 2027. So even though we don't have the final financing solution, we are gung-ho on getting these little packages of construction done to make sure that we're ready for 2027 and we can meet that overall schedule. Then on the financing side, we are very, very hopeful that we will definitely have positive news coming out. And as I said to you earlier, we are confident that we will have FID before the end of the year.
Gavin, appreciate your time today. Let's stay in touch. Let us know how you get on, okay?
Great. Thanks, Matt.